What's up, everybody? Welcome to another episode of China Update. It's good to see you guys. Hey, look, basically I've just found out, look, you can probably look at my face, I'm so tired. It's been a crazy week. There's so much been going on this week, work-wise, but also just following all the developments with the election as well, and the Chinese reaction. It's been pretty crazy, but I've just found out that I have to work over the weekend and I'm doing a business trip. I had a lot that I wanted to discuss with you guys this week. I had what was going to look like a 40-minute episode, but now that I have to travel, I don't have the time to actually put that research and write up a script for a 40-minute episode. I was worried I wouldn't even have time to actually put this episode up, but I wanted to put something up. I'd rather put a short episode up rather than no episode at all. So that's what I'm doing now. I've basically taken a couple of interesting stories that are interesting and important. I'm going to discuss it here. It's going to be a much shorter episode, maybe around 10 minutes. And then I'll be back to normal next week with a regular episode. So I hope you guys don't mind that it's a little bit shorter and that I look absolutely exhausted. So please forgive me. I'm going to throw it up probably on Saturday. I'm going to film it Friday, edit it on the plane, and then post it from the hotel if there's good internet. So hopefully you guys will get this on Saturday. Throw your comments below if you enjoyed the episode. Don't forget to smash that like button. It's a massive help. And without further ado, let's just jump into this week's much shorter China update. At the start of the week, it was announced that Jack Ma's massive financial player Ant Group's highly anticipated IPO in Shanghai and Hong Kong has been suspended. The official reason? Well, the official reason is on Monday, regulators released new draft rules that would lay out stricter restrictions on online micro lenders, including two of Ant's major profit-generating businesses. These new rules could have a materially adverse impact on Ant's business, and as such, they needed to suspend the IPO. A spokesperson for the China Securities Regulatory Commission said on Wednesday, quote, that the decision to suspend the listing of Ant Group on the board was made by the Shanghai Stock Exchange in accordance with the law. End quote. Okay, so what was the unofficial reason? Well, speculation has it that the real reason for the suspension was due to Jack Ma's speech at the Bund Summit on October 24th, and we covered that summit on here at the time actually in some depth, in which he criticized at that summit in his speech China's quote outdated banking system, end quote, and urged the government to loosen regulation for fintech innovation. Quote, China doesn't have a systemic financial risk and problems because China's finance doesn't have a system. We need to prevent bad things from happening by setting up a functioning financial system. And, quote, several reports quoting senior government officials and regulators said that officials in Beijing were, quote unquote, furious with Ma. One official is reported to have described the speech as a, quote, punch in the face, end quote. It may be a while before Ant can try again with the IPO, initial public offering, as the new regulations could lead to significant new costs and probably restructuring of the business, which will likely result in it being worth much less than it would have been worth had they been allowed to proceed with the IPO as planned. Regulators do have reasons to be concerned with Ant financial size. We should point out at this point, to say Ant Group is big would be quite the understatement. To give you an example of just how big this group is, PayPal, the American company, processed $712 billion US internationally in 2019. Alipay, just in the mainland of China, saw 17 trillion US dollars in transactions last year. Now we should say at this point as well that there are some financial analysts who dispute some of these numbers that are released by Ant, but most agree that we're talking about tremendously massive amounts of transactions within Alipay and Ant Group's other platforms. Now there is a lot going on behind the scenes with this. Suspending this IPO will be costing a lot of money for a lot of powerful and well-connected people, but it seems that regulators and officials in Beijing were not very happy too, and they were willing to deal with that political fallout. Remember, rich and powerful groups vie for policy influence in Beijing just as much as they do in Tokyo, London, or Washington. On Tuesday, the CCP Central Committee published its fifth Plenum proposals. We already covered the policy included in the communique last week. I would highly recommend checking that out because we do look at a lot of details, a lot of specific policy positions that is going to affect the upcoming 5-year plan. You can click up here and it will take you through to that episode where we do jump in depth. Now, the full name of this document that we're looking at now that was released early in the week is the, quote, CCP Central Committee's proposal for the formulating of the 14th 5-year plan for national economic and social development and the long-range objectives through to the year 2035, end quote. That is the full title of the document. I want to touch on 3 statements that Xi Jinping, General Secretary Xi Jinping, made in the document because I think they strongly reflect the philosophy of his administration. 1. The government-market relationship should be well managed to give better play to China's institutional advantages. 2. A balance between opening up and self-reliance should be maintained for China to better adapt to both the domestic and international situation. 3. China should properly handle the relationship between development and domestic security. End quote. In the document's explanatory note, General Secretary Xi Jinping also expressed his desire that China meet implicit GDP growth targets by calling on China to, quote, double its total economic value on a per capita income basis by 2035. End quote. The next 5-year plan seems to be expanding in scope as well. In an article this week entitled, quote, New 5-year plan to tackle external interference in Hong Kong and Taiwan, end quote, the state-run Global Times wrote, quote, different from the 13th 5-year plan, 2016 through 2020, which focused more on the economic, cultural, and educational cooperation in the regions, the 14th 5-year plan highlights the overall governance of the central government over the special administrative regions, stressing the implementation of the law and enforcement mechanism on safeguarding national security. China should resolutely guard against and contain outside influence in Hong Kong and Macau affairs, reads the new plan. End quote. Okay, last up, I want to talk about Australia, guys. Sitting there at the bottom of the world next to old New Zealand. So let's just end on this note. I am sorry that it is such a short episode, but I hope you have enjoyed what we have covered so far. From today, as I'm filming this Friday, commodity traders in China were banned from importing products including coal, barley, copper ore, sugar, timber, wine, and lobsters from Australia. Iron ore, however, Australia's biggest export to China and a very important commodity for China's construction sector, can still be traded. This is yet another major escalation in Australia's trade and general diplomatic dispute with China, which is estimated to cost this new escalation Australian exporters about $6 billion. Though the relationship between Australia and China has been cold since 2018, relations collapsed in April when Beijing was angered by Canberra's call for an independent probe into the origins of the coronavirus. On Tuesday, PRC Foreign Ministry spokesperson Wang Wenbin expressed, quote, we hope Australia can do more to enhance mutual trust and bilateral cooperation as the China-Australia Comprehensive Strategic Partnership calls for, and bring the bilateral relations back to the right track as early as possible. And, quote, Chinese state media has been keeping up the pressure too, pushing the narrative that this is all Australia's fault or this is all due to Australia's actions. Quote, with such ideology-based hostilities expanding into many areas, Chinese capital, importers and consumers are losing confidence in Australian products and services. Canberra's irrational attitude towards China is the essential cause to the darkening economic and trade prospects between the two sides, which Canberra tends to ignore alongside its campaign to fabricate economic coercion by China. End quote. On Thursday, Australia's Trade Minister Simon Birmingham said, quote, if China is to be true to the statements of its government, then it should provide confidence that normal customs and related processes will apply to imports of goods such as seafood and wine, end quote. He called on China to, quote, play by the rules, end quote. Chinese policymakers are likely showcasing an example of their ability to use their market as a stick in foreign relations and in pushing their own economic agenda. Though this approach does risk not only undermining goodwill towards China generally, but also undermining its ability to use that market as a carrot. Other actors could see China as an unreliable economic partner and may accelerate efforts to find alternative markets and pursue trade blocs that exclude the PRC. In a keynote speech via video at the opening ceremony of the third China International Import-Export this week, General Secretary Xi Jinping expressed, quote, "Our aim is to turn the China market into a market for the world, a market shared by all, and a market accessible to all." End quote. Okay guys, that's a shorter version for this week, but I hope you enjoyed it. I look forward to talking to you guys down below, and I will see you guys next week for the midweek episode of China Update.